Cryptocurrency has revolutionized the way we think about money, offering new opportunities and freedoms. But with innovation comes risk. Over the past decade, the world has witnessed some of the most audacious hacks in financial history, targeting digital assets worth billions. In this video, we'll explore the biggest crypto hacks ever recorded, how they happened, and the impact they left on the industry. From early exchange breaches to sophisticated DeFi exploits, each case reveals lessons about security, trust, and the evolving landscape of digital finance. Let's dive into the world of crypto's most infamous heists. Mt. Gox hack in 2014 remains one of the most notorious events in crypto history. Once handling over 70% of all Bitcoin transactions worldwide, Mt. Gox was considered the backbone of the Bitcoin ecosystem. However, a series of security breaches led to the loss of 850,000 Bitcoins, valued at over $450 million at the time. The exchange filed for bankruptcy, leaving thousands of users devastated. This incident highlighted the importance of robust security measures and the dangers of centralized exchanges, setting the stage for future reforms in the industry. 2016, the Decentralized Autonomous Organization, or DAO, was launched on the Ethereum blockchain as a groundbreaking experiment in decentralized governance. However, a vulnerability in its smart contract code allowed an attacker to siphon off 3.6 million Ether, worth around $60 million at the time. The incident forced the Ethereum community to make a controversial decision, to hard fork the blockchain, effectively revering the hack. This event not only tested the resilience of the Ethereum network but also sparked debates about immutability and governance in blockchain systems. Coincheck, a major Japanese cryptocurrency exchange, suffered a massive hack in January 2018. Hackers exploited weak security protocols to steal 523 million NEM tokens, valued at over $530 million. The breach exposed significant flaws in the exchange's storage practices, as most of the tokens were kept in a hot wallet, making them vulnerable to online attacks. The incident prompted regulatory crackdowns in Japan and led to stricter security requirements for exchanges, aiming to protect users and restore confidence in the market. August 2021, Poly Network, a decentralized finance DeFi platform, was targeted in one of the largest crypto heists ever. Hackers exploited a vulnerability in the platform's smart contracts, draining over $600 million worth of various cryptocurrencies. In a surprising twist, the hacker later returned most of the stolen funds, claiming the attack was meant to highlight security flaws. The incident underscored the risks associated with DeFi protocols and the need for rigorous code audits and security practices in the rapidly evolving crypto landscape. Ronin Network, which powers the popular blockchain game Axie Infinity, was compromised in March 2022. Attackers managed to steal 173,600 Ether and 25.5 million USDC, totaling over $600 million. The breach was traced to compromised private keys, allowing hackers to forge withdrawals. This hack highlighted the vulnerabilities in cross-chain bridges and the importance of multi-signature security. The Ronin incident served as a wake-up call for the entire gaming and DeFi sectors, emphasizing the need for enhanced security protocols. 2016, Bitfinex, one of the world's largest Bitcoin exchanges, suffered a major security breach. Hackers exploited a vulnerability in the platform's multi-signature wallets, stealing nearly 120,000 Bitcoins, valued at around $72 million at the time. The hack led to temporary suspension of trading and a controversial socialized loss policy, where all users shared the losses. Years later, some of the stolen funds were recovered, but the incident remains a stark reminder of the persistent threats facing crypto exchanges. September 2020, KuCoin, a global cryptocurrency exchange, was hacked for over $280 million in various digital assets. The attackers gained access to the exchange's hot wallets, quickly moving the stolen funds through decentralized exchanges to obscure their trail. KuCoin responded swiftly, working with other platforms to freeze and recover a significant portion of the asset. The incident demonstrated the importance of rapid response and cooperation within the crypto community to mitigate the effects of large-scale breaches. IceHash, a popular cryptocurrency mining marketplace, was hacked in December 2017. Attackers compromised an employee's computer, gaining access to the company's payment system and stealing 4,700 Bitcoins, worth about $64 million at the time. The breach forced IceHash to halt operations temporarily and reimburse users over time. This incident highlighted the risks associated with centralized platforms and the importance of employee cybersecurity training to prevent similar attacks in the future. Thumb, one of South Korea's largest exchanges, has experienced multiple hacks over the years. Notably, in 2017 and 2018, hackers stole tens of millions of dollars in cryptocurrencies by exploiting weak security measures. These repeated breaches led to increased scrutiny from regulators and forced Bithumb to overhaul its security infrastructure. The incidents serve as a reminder that even major exchanges are not immune to attacks and must continually adapt to evolving threats. November 2019, Upbit, a leading South Korean exchange, lost 342,000 Ether, valued at approximately $50 million, to hackers. The attackers transferred the stolen funds to an unknown wallet, and despite efforts to track and freeze the assets, most were never recovered. The breach prompted Upbit to temporarily suspend deposits and withdrawals, and the company later reimbursed affected users. This incident reinforced the importance of cold storage and constant vigilance in exchange operations. Gate.io, a global crypto exchange, was targeted in 2019 when hackers exploited a vulnerability in the Ethereum Classic blockchain, executing a 51% attack. This allowed them to double spend coins and steal over $200,000 worth of assets. The incident highlighted the risks associated with smaller blockchains and the need for exchanges to monitor network security closely. Gate.io responded by increasing its security measures and compensating affected users. May 2021, Pancake Bunny, a DeFi yield farming platform, was exploited through a flash loan attack. The attacker manipulated the price of Bunny tokens, causing the platform to lose over $45 million. This type of exploit demonstrated the vulnerabilities inherent in DeFi protocols, especially those relying on complex smart contracts and price oracles. The Pancake Bunny hack served as a cautionary tale for developers and users alike, emphasizing the need for thorough code audits and risk management. In December 2021, BadgerDAO, a decentralized finance protocol, was hit by a front-end attack. Hackers injected malicious scripts into the website, tricking users into approving unauthorized transactions. Over $120 million in assets were stolen before the exploit was discovered. This incident highlighted the importance of securing not just smart contracts but also web interfaces, as attackers increasingly target all layers of DeFi platforms. Wormhole Bridge, a protocol connecting Solana and Ethereum, was exploited in February 2022. Attackers found a vulnerability in the bridge's smart contracts, allowing them to mint 120,000 wrapped Ether without collateral, worth about $320 million. The incident underscored the risks of cross-chain protocols and the need for rigorous security audits. Wormhole's parent company quickly replenished the lost funds, but the hack shook confidence in the safety of blockchain bridges. Ream Finance, a DeFi lending platform, suffered multiple hacks in 2021. The most significant occurred in October, when attackers exploited a vulnerability to drain $130 million in assets. Previous incidents had already cost the platform tens of millions. These repeated breaches highlighted the challenges of securing complex DeFi protocols and the importance of continuous security assessments and upgrade. 2017, a critical vulnerability in Parity's multi-signature wallet software led to the loss of over 150,000 Ether, valued at more than $30 million. Hackers exploited a flaw in the wallet's code, allowing them to take control of funds stored in several wallets. The incident prompted a wave of security reviews across the Ethereum ecosystem and underscored the importance of thorough code testing and peer reviews in smart contract development. Albit, a South Korean exchange, declared bankruptcy in December 2017 after suffering two major hacks in the same year. The final breach resulted in the loss of 17% of its total assets, forcing the company to cease operations. The attacks were linked to North Korean hackers, highlighting the geopolitical dimensions of crypto security. Albit's collapse left many users with significant losses and underscored the need for robust exchange security. Ape, a Japanese cryptocurrency exchange, was hacked in September 2018. Attackers stole over $60 million in Bitcoin, Bitcoin Cash, and Monocoin by exploiting vulnerabilities in the exchange's hot wallets. The breach led to a government investigation and forced Safe to seek financial assistance from other firms to compensate affected users. This incident further emphasized the risks of storing large amounts of funds in hot wallets. Grail, an Italian exchange, lost 17 million nano tokens, formerly Ryblox, in 2018, valued at around $170 million. The platform's owner claimed the loss was due to a software bug, but many users suspected foul play. The incident led to legal battles and the eventual bankruptcy of Grail. This case highlighted the lack of regulatory oversight and the risks faced by users on smaller, less established exchanges. August 2021, Liquid, a Japanese crypto exchange, was hacked for over $90 million in various digital assets. The attackers gained access to the exchange's warm wallets, moving the funds to their own addresses. Liquid responded by suspending deposits and withdrawals and working with other exchanges to track the stolen assets. The breach highlighted the ongoing challenges of securing digital assets and the importance of swift incident response. Arvis Finance, a DeFi yield aggregator, was exploited in October 2020 through a flash loan attack. The attacker manipulated stablecoin prices, draining $24 million from the protocol. Harvest Finance responded by offering a bounty for the return of the funds and compensating affected users. The incident highlighted the vulnerabilities of DeFi protocols to flash loan exploits and the need for robust price oracle mechanisms. OakenForged, a blockchain gaming platform, was hacked in December 2021. Attackers gained access to users' private keys stored on the platform, stealing over $140 million in PYR tokens. The incident raised concerns about the security of custodial wallets and the risks of storing sensitive information on centralized servers. OakenForged responded by reimbursing affected users and strengthening its security protocol. April 2020, the Lenf, MeDeFi platform, and the MBTC token were exploited due to a reentrancy bug in the ERC-777 token standard. Attackers drained $25 million in assets but later returned most of the funds. The incident highlighted the complexities of smart contract interactions and the importance of thorough testing and auditing of new token standards before deployment. BZX Protocol, a DeFi lending and margin trading platform, suffered multiple flash loan attacks in 2020. Attackers exploited vulnerabilities in the protocol's price feeds, resulting in losses exceeding $8 million. The incidents prompted BZX to upgrade its security and implement new risk management strategies. These attacks demonstrated the importance of resilient price oracles and continuous monitoring in DeFi platform. Etherbase, a European cryptocurrency exchange, was hacked in September 2020. Attackers breached the exchange's hot wallets, stealing over $5 million in various cryptocurrencies. Eterbase immediately notified law enforcement and worked with other exchanges to track the stolen funds. The incident highlighted the persistent risks of hot wallet storage and the importance of industry-wide cooperation in responding to hacks. July 2023, AlphaPo, a crypto payment processor, suffered a hot wallet breach resulting in the loss of over $60 million in various tokens. The attackers exploited vulnerabilities in the platform's wallet infrastructure, moving the stolen assets through multiple blockchains. The incident underscored the ongoing threat of hot wallet attacks and the need for robust, multi-layered security solutions in the crypto industry. Atomic Wallet, a popular non-custodial wallet, was exploited in June 2023. Hackers managed to steal over $100 million in various cryptocurrencies from users' wallets. The exact method of attack remains unclear, but the incident raised concerns about the security of non-custodial wallets and the importance of regular software updates and user education to prevent similar breaches. Euler Finance, a DeFi lending protocol, was hacked in March 2023. Attackers exploited a vulnerability in the protocol's smart contracts, draining nearly $200 million in assets. The incident prompted Euler to work with law enforcement and blockchain analytics firms to track the stolen funds. This hack highlighted the ongoing challenges of securing DeFi protocols and the importance of community and industry collaboration in responding to major breaches. History of crypto hacks is a stark reminder of the risks inherent in digital finance. Each incident has pushed the industry to innovate and strengthen security measures, from improved wallet infrastructure to more rigorous smart contract audits. Users and developers alike must remain vigilant, adopting best practices and staying informed about emerging threats. As the crypto landscape continues to evolve, the lessons learned from these major hacks will shape the future of digital asset security and trust.